Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. Want to welcome once again all of our new listeners from Benzinga Pro. You can find the show once again through Benzinga Pro as of this week, or I guess as of Friday perhaps, by going to the chat function in Benzinga Pro, going to the Pre-Market Prep chat room, and here we are. So welcome to our listeners from Pro. On today's show, it's going to be an earnings show, folks. A lot of earnings. Disney, Beyond Meat, Activision, EA. We'll get to as many of them as we can because we didn't discuss as many as I wanted to yesterday. Our guest today is Tommy Lackey. He will join the show at 8:35. Tommy is the founding partner at Relativity Capital Advisors, and he's always got some good charts for us. So that'll be in about a half hour or so. I'll bring Joel on. Joel, give us a quick recap on what happened in the overnight session.
So we got 3 chats going at one time, huh? That's got to be a record. Well, we're in the green by 16 3/4 handles at 28.75. Actually, a nice range overnight. Had follow through on that week close at 28.43.50, but by the dippers came in. They came in with a vengeance. They were probably following crude oil higher. I'll get to that in a second. Got up to 28.86.25. That's just shy of the high from yesterday at 89.75. So we got a big level up top to get through in order to that open path up to 2,900. As I mentioned, crude, I'm talking July here, it did trade up to 27.98, but we've had a reversal here. We are now down 41 cents at 26.08. So big reversal in crude. Gold down $2 at 17.0860. You have silver going the opposite ways, man. Spreaders must just be getting rolled on that. Up 16.5 cents at 15.275. And don't look now, Bitcoin fans. We got 10,000 in sight.
It's back.
Yeah, $520 worth to the green.
The halving.
The halving.
Haveling? How do you say it, Spencer?
The halving? You were right the first time.
I like the haveling.
No, what about the halving?
Because these Bitcoin people always say everything silly. Anyways, I know nothing about Bitcoin. So I actually started to get bullish on Bitcoin before this whole COVID thing started, and Bitcoin was at 10,000, and it went straight down after that. So I'm glad I'm not a Bitcoin trader because I would have lost a lot of money on that. Because I would have been in January when I was obviously bearish the markets. I said I'd be bullish Bitcoin and something like this because if Bitcoin doesn't go up in a pandemic, it's never going to go up. It went straight down in the pandemic. So I don't know what the hell I'm talking about in Bitcoin. So I'm staying out of Bitcoin trading. Probably for my entire life.
It's up. The
Bitcoin halving is happening in 6 days.
The halving is happening. Ooh, it's so exciting.
Yeah.
So
exciting. Do you know what calving is? Do you know what calving is?
This is going to be a bad tangent, isn't it?
This is not a bad tangent at all.
Okay, tell me.
Spencer, do you know?
What is the word? I've never even heard that word before.
Yeah, it's and I've seen it actually happen. It's
what is the word? Say it again.
Wait, it's something to do with horses, right?
Nope.
All right.
No.
Don't know.
Calving. CALVING.
It sounds like birthing of a calf.
Nope. It's when you're looking at a glacier and like part of the glacier falls off and it just crumbles right in front of you.
It's called a calving, not a halving of the glacier. It's a calving of the glacier.
Calving is what they call it. And it's
you learn stuff. Not only about the stocks, you learn stuff about English here too. There's a new word for you. Word of the day. Not halving.
It's beautiful.
Calving or calving?
CALVING.
You got to spell things for me. Yeah.
C is in Canadian. A is in A. L.
That's an A.
ALVIN. I've seen it happen in Alaska.
Word.
Beautiful. All right. We got too many earnings to talk about this. Where do you want to go, Spencer? We're going to let you take the lead here, and we're going to cover everything in our sheet today. We are not going to deviate at all. Go ahead, Spencer.
Okay, probably Disney. Also, I should mention before we get going, ADP at 8:15. It'll be our first real color on the unemployment rate. So ADP today, jobless claims tomorrow, jobs number on Friday. So keep that on your radar, Dennis, in 10 minutes from now. Disney, let's go to DIS.
What do we have in 10 minutes?
ADP at 8:15.
ADP. Okay.
Yeah. Okay. So Disney yesterday, Q2 EPS.
Yes.
The coronavirus cost them, they said $1.4 billion. Q2 EPS 60 cents versus an 88-cent estimate. Sales of about 18 billion versus $17.8 billion estimate. A mixed report. Obviously, their segment that got hit the hardest was parks and experiences, down 10% on a year-over-year basis.
Yes.
They got some help from Disney Plus. Direct to consumer was up more than 100% on a year-over-year basis in terms of revenue. Disney Plus now has what did they say? It was 58? 54 and a half? No, it was. I just lost the year.
Disney Plus numbers were excellent.
Disney Plus. I think it was somewhere in the 50s, $50 million subscribers. So that helps a little bit there. They had previously said, I believe, that it would take them the bulk of the year to get to 60 million, and they're already in the high 50s. So that helped to offset things. But this, make no mistake, it was a bad report.
Make no mistake, we have no idea what it's going to look like going forward. So the bad report and the bad numbers from the first quarter, remember, still encompass 2.5 good months. So it's the last couple of weeks that obviously hits the first quarter. It's the second quarter, and obviously when we're going to go here, or is it Disney Q2? This was from up till the end of March, right? I'm just trying to
It's Disney
because they're talking about second quarter too.
It's Disney's fiscal Q2.
It's their fiscal Q2, but it's still up to the end of March. That's what's messing me up because they're talking about Q2, and I was like, well, we're still in Q2, so It's their fiscal Q2. But when you look here, obviously, we know it didn't really get dicey until we got into April. And that's where we've been talking about all the companies. It's not about what happened last quarter. It's about what's happening right now, what's going on this quarter. We know the parks have no revenue right now. We know ESPN was always a mess. We know Disney Plus is doing very well, but it's such a small portion of the company that I don't think it's going to even help. Obviously, help the top line slightly, but it's not going to help the bottom line at all. It's difficult. And when they suspend the dividend, when Disney comes out and suspends the dividend, which I don't know if they've ever done that before. I'd have to go and look at my history books on Disney, but I don't remember them ever suspending the dividend, not my 20 years of prop trading. It's significant. There's significant issues here. And they get a pass somewhat because they're Disney. But when you really think about it, the cruise lines, airlines, Disney is right in that category right now. Crowded, confined spaces on these rides. There's not going to be this rush to go back to Disney World. I don't think like we come and we reopen. Let's say we just reopen the parks in August or September, or even July. There's not going to be a rush. And what you were talking about, the Shanghai parks, they're trying to reopen that. But what did you say? It's going to probably be at like 30% capacity or something?
So the Chinese government has mandated that when they open at 30% capacity. But Disney said that when they do open, they'll open well below that and eventually ramp up to that number. So their Shanghai park gets about 80,000 visitors per day. So 30% of that is 24,000. So they're going to start below 24,000 people per day and ramp up to 24,000. And then it's anyone's guess what happens from there. So we're talking about the parks operating at best 30% capacity.
So Spencer, you researched this before. What do you remember the percentage? Tommy Lackey with a great question. What's the percentage of income from the parks? Do we remember? It wasn't like 25 to 30
Yeah,
somewhere
Spencer,
in there.
you did.
Yeah, it was.
About a third?
It's about a quarter of the company, a quarter of revenue.
Remember though, it's the good quarter. It's obviously they've got the cord cutting has hit ESPN. Disney has had some trouble in their other businesses. The movies have been fine, but that's getting hit.
Actually, I think it was more than a quarter, maybe more than a quarter.
Well, we should go and maybe we could do this, and we obviously can't do it live on the show here right now. So I guess we should have been more prepared.
I'll do it right now. I'll do it right now.
But go to their income statement and see where it breaks down, because obviously you've got productions, movie productions, a significant part as well, and that's on hold because they're not making new movies right now. So that portion of the business gets hit as well. So really, when you think about it, the portion that's really doing probably really good is Disney Plus, but it's
the
such a
only
small
part.
portion of it. It just can't make up for it. So I just think I
Bill
can't.
Lay
I love
says
Disney.
it's 37%. 30. That's
Yeah,
what we're getting from.
yeah,
Yep.
yeah. He's
Parks
Ah,
right.
are
It's
37.
30.
yeah.
He's
Whew.
right. If 37 and
Oh,
Media Networks is like 33-ish.
so the two highest businesses, media, and are both getting slammed here. I mean, obviously, yes, they own some Fox, and we know they own some stuff in there, but there's not going to be and then movies that's probably all tied into the media, right? Is
No
that where that?
movies. No, movies
Okay,
is
where's that? How
studios.
much is that? Because that's going to get hit too.
That is 15%.
15. So that gets slammed. Parks gets slammed. Media probably doesn't get slammed quite as much, but it's not doing great. I mean, you look at this and you're like, this whole entire business is getting slammed right now. Disney is at ground zero for this. The reason it hasn't gotten hit like the Carnival Cruise Lines, the other ones, is because it's Disney. The franchise is just, it's got the name Disney. It's got the power. If you would have said to me, last year in November that I'd get a shot to buy Disney at $100, I'd been backing up the truck. But no, I can't do it right now until I get more clarity on where we're going with this thing. Because if those parks stay closed for a long time, Disney might have to raise capital to get through it. Like, I don't know what their cash situation is. It's probably okay for a few months. But if you think that the park revenue is going to be down for the rest of 2020, and also, we're not running to watch movies here, and they're not obviously even doing any filming right now, to my understanding. It's going to be a real ugly 2020. So
What about
there could be some burn,
what
some
about
cash burn here.
Yeah, I mean, you also could talk. Well, a couple things. First, I'll say about the parks is, they still got the expenses. They got to
A
still.
lot of them.
Yeah, right, right. And then also with the sports, I mean, the sports is a real wild card too. The thing is, if we have fanless games and they're still televised, then there's still the television revenue. But there's going to be some real major changes. I wouldn't want to own a professional franchise right now, and any means. I mean, you're going to be losing a lot of capacity there. There's just too many unknowns there for the stock, and
Yeah.
it's just being resilient. I mean, it's down 60 cents. I think I saw it trading down at 98.99. I mean, it's just so loved, and there's a lot of optimism that we're coming out of this pretty quickly.
There's still a lot of people, I hear I'm going to buy, 100 shares of Disney or maybe not 100, depends on your financial situation, I guess, but I'm going to buy some Disney and throw it in my long-term portfolio for my kid. I mean, that sounds like a good idea. It does sound like a good idea. I want to do that.
80 years.
I want to do that, but I don't know if they're not going to have to they could have to do an equity raise. I mean, it's not off the table that you could have actually some dilution in Disney. It's possible. Then they're suspending the dividend temporarily. They're conservative. They're keeping their cash for a reason, and that's the first step: is you get rid of the dividend temporarily. I mean, again, a vaccine, a cure changes everything. This is ground zero stock. This will be the one that will rip it higher, because when you look at it on a valuation perspective to last year's earnings, it's attractive at these prices. But we don't know what the earnings are going to be like going forward. They could be down for a long time. And if consumer habits change like Warren Buffett was changing, and people are just going to get turned off of being in crowds, nothing is more crowded than the Disney parks that they're deriving 35% of their revenue from. So it's difficult to just come in here and buy Disney at $100 in the current situation.
Hey, Dennis, ADP is coming up here. I don't know if it's going to move the market.
Go wide?
Yeah, go wide. Go wide.
That means I'm sitting out there making markets. I shouldn't be making markets.
You'll be like, oh, I'm getting filled. Ding, 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 ding,
ding, ding, ding, ding, ding. Filled. It's like, filled.
No, we'll see what happens to that ADP number, but same here on Disney. I mean, hands off. I know you guys were liking it 130, 140, 150, and it had that gap to fill. And technically, it's holding up pretty well. But I really think
I don't think we're going to move much on the ADP.
No, you don't think so?
We're getting it. I don't think we're going to move much. Maybe I'm wrong.
Okay. Well,
is it out?
Mm-hmm.
And we've leaked the point.
The estimate is a net minus 21 million jobs, and what is the number here?
CNBC says breaking news.
We've
got it. We've got to hunt it down to the pro. It comes right out.
Okay, so it ended up being just above the estimate.
It's down 20 million. Okay, it's a non-event. At least at this point in time, we're not really moving at all. We've moved a point. So
All right, let's go. I mean, we've talked about this. I think Q2 is, going to be more important. I think, a lot of the problems here
Disney's
were at the
Q3,
end.
yeah.
Yeah, Q2, 3. That's what I kind of been saying a long time is that we're gonna have to. I mean, we're kind of getting a pass here. We're getting out of Q1. Q2 though, I think is going to be more telling. But
You've got the support though. If you just ignore everything that we're in and ignore logic, and you look at just the chart here, Joel, what do you see? I mean, look at the last month. I see $99. It's got huge support here, don't you?
Yeah,
It kind of jumps out and bites. It's the Harlan Payan. Harlan, if you're out there, hi. It's the Harlan Payan chart where he says, look at a chart for the first 2 seconds and what level jumps out at you. $9,900 jumps out at me and bites me in the nose. It's bottomed here. If you look in April, at 99.61 on April 13th. It bottomed here at 99.13 on April 21st. It bottomed 3 days later, April 23rd, 99.46, 99.52. The last couple of days, just above 100. We were trading 99.98 last night. We're bouncing there too. Support is support until it's broken. Yep. So if you want to trade technically, you have a support level. So I can't argue if you're coming in here. I'm not putting Disney in my long-term portfolio. As a trade, there's support here. Takes the 98 out, starts going 97. I wouldn't want any part of it because then you've got a slippery slope down to the low 90s. But as long as it's holding 98, 99, support is support until it's broken.
All right, Triple D, just real quick before we go on our next earnings report, someone asked what you liked in the chart when you bought Glue Mobile. I responded that it was a little bit more of a sympathy play with the other stocks in this sector, but do you want to explain?
Quiet consolidation up at the highs. It wasn't selling off. So you had the big run if you look in April. And so first I wanted a story. The story, and Michael Pachter gave us the story when he was on our show a week and a half ago. And I believe he said Glue Mobile was positioned well for the way that they're set up. He said Zynga wasn't positioned as well as Glue Mobile. He liked Glue Mobile better in that case. So I've got an analyst that covers the stock, or at least, it covers this gaming sector. Nobody, I believe, knows the gaming sector from a fundamental basis better than Michael Pachter. He's given me Candy Crush before. When Michael likes something, I listen. He gave me Activision. The whole reason I'm still in Activision ATVI is because of Michael Pachter. I bought it back at $50 because Michael Pachter was on our show, and he said in 2 years this is a double. And that was before the whole COVID thing. And now it's got, obviously, that everybody's playing a little bit more video games. He liked Glue Mobile too, and he's on our show. So now I've got it on my list. I've played Glue Mobile before. I sold it, and I wanted to rebuy it sometime. This isn't like a value, like earnings play here. This is just, I think we have a lot of people playing games right now, and this is online gaming. So it's had a nice run from a technical basis. I liked it too. So I've got the fundamentals all set up. I like my ducks in a row. And now I have the technicals kind of setting up well too. So I was looking at it where it's had the run up in April from like $5.50 up to $8. Quiet consolidation for about a week and a half, right around the 8. Not giving it back. So I struck, I believe, May 1st or May 2nd, right in there, and I got it at $7.90. I think it was actually just the day before I had the big run. So May 4th, I guess, $7.90, a few days ago. And then obviously had a nice run yesterday. So it broke out. So I still like Glue Mobile. I believe it broke out. I believe the stock could run to 10. It's not a long-term trade for me, but it wouldn't even shock me if it could run to 11 or 12. But it's a swing trade. So I'm going to be in this for a little while. Okay, I would say my stop out point being the low of the move now, which is 751.
We're leaking here. We're only up 10 handles here. Given back a lot of the gains from early this morning. I'm looking mid-range on the session here at 65. So a little bit of a fade going on here. Great segue here into Activision. Good earnings from ATVI.
Yeah, and we'll do ATVI and EA together because they're going opposite ways here this morning. Both with pretty good reports, though. I'll do the ATVI numbers first. EPS 58 cents versus 38 cents. Revenue 1.52 versus 1.32 billion dollars. So a beat and a beat handedly for Activision Blizzard. And then I'll get the EA numbers for you. EPS, $1.43 versus 98 cents. Sales, 1.38 versus 1.19 billion. So another beat and a beat for EA. Both gave some guidance for upcoming bookings, and they're going opposite ways.
I'm going to tell you right now, I actually own both of these in my long-term portfolio. I was going to play the game, and Joel guessed in the pre-market of what stock did I buy last night in my long-term portfolio, and it was EA. I went in after hours last night, and it's again I own all these gaming stocks now. I just think video games aren't going away. They were actually an okay segment coming in. And I think COVID and I think people, concerned and a lot of people staying at home are playing more video games. So I see a pullback in EA. And what was the low last night, Joe? Because you're not going to believe where I got this in my long-term account.
EA on the dip. Let's see here. The actual low, it was a spike low to 112.22. Let me guess, 112.50.
Holy, you're good at guessing. I got it at 112.55, I believe. And just not a huge position, just a light little, nice little position. But I'm like, it's down $7. It's got the COVID, potential to bounce back because even if we're in a lockdown, gaming stocks are in favor right now. The quarter, and did you give it the results for EA? You did, right?
Yeah, they were good.
The quarter was good. It was a good quarter. It was just priced for perfection. And I like buying stocks that have good quarters and then sell off when they're priced for perfection. So I saw lots of support down there in the 111 area, and I was like, I think it holds. So I actually was part of the the bottoming process in this last night, I guess. But yeah, so I bought this for my long-term portfolio, 112.55. And so now I own Activision Blizzard, which I kind of almost wanted to sell in the report because I had run so far, but I held it.
What are you going to
do
now?
Activision Blizzard, I've got Take-Two, I've got EA, I got Glue Mobile. Those are all the gaming stocks, and Microsoft, I guess, is kind of got a big gaming portion too. I've got all those stocks in my long-term portfolio.
Did I tell you that Mike Olson? Remember we've had Mike Olson on from Piper. Did I tell you what he's doing now?
What's he doing?
He went over to the Minnesota Vikings, and he is heading up their e-gaming team, their e-gaming division.
That's we've talked about esports, and it has been talked about for a while, but esports is still for real, and that's another tailwind for these gaming stocks in the longer
I think so
run.
Too.
I think video games are not going away. I think the younger generation, and especially when they're growing up on iPads and they're growing up, my 2-year-old can use an iPad. I mean, the video games are not going away. So I think it's something that, when you're thinking about long-term potential investments, I think the video game stocks are still good. Yes, the valuation, some of them are a little bit, they're not the cheapest things in the world, but there's some tailwinds here that cannot be denied. And that's why
was this a trade or is this a long-term?
Oh, I put it in my long-term account. This isn't a trade.
Really?
Yeah.
Wow.
Although sometimes I will get myself out of stocks that I put in my long-term account if they break support. So I'm looking at that 110, 111.
I see that. Yeah.
I could be talked out of it again. I have a lot of exposure to gaming. The counter trade and the counter trade to all of this is we are opening up. So, we are going to open up for a while. And if the opening up goes well, maybe some of these tailwinds that are going into some of these video game stocks comes out. It's possible. I'm not confident. My opinion, my personal opinion, you can take it, whatever. But my personal opinion is I don't think the opening is going to go that well. I think you're going to have a few weeks where everybody's kind of excited and, oh, yeah, we're opening up. We're looking like we're getting out of this. But I don't think COVID is going away. And I think there's still going to be a lot of people that are spooked. I've talked about this. So I don't think people are just going to rush back to the parks, rush back to their restaurants, rush back to their airlines, rush back to, the cruise lines. I don't see that everybody's rushing back into that. So if people are still going to kind of like, I'll kind of go out, but I want to be home more than I used to, the gaming stocks still benefit from that. So that's why I like the gaming stocks.
All right, let's just real quickly go over the technicals here. You got a nice bounce in EA. I will give you the level of control on the upside, and that's 116 because you bounced off that 112.22. Whoever picked it up early there is scalping. They're out at 116. How does that relate to yesterday's low? Oh, beautiful setup here. Yesterday's low, 116.30. So boom, you get above that. Maybe you work your way up to the close of 119.61, but very important to clear yesterday's low at 116.30. For Activision Blizzard here, it had a big run yesterday, and when I talked about it on the at the close show, man, I thought 71. I thought that really was going to run into some problems there because there were two monthly highs just under 71. That's not turning out to be the case right now. We're trading above $73, 73.10, up 457 at the highs of the session. So maybe for this one, just see where that pre-market high is and use that as a bogey. You're getting your next monthly high doesn't come in until I believe in the 98, 98, 98. I don't think that's on the radar for today.
No.
And you're through some retracements and stuff. So I know we're well through the 50 because we went, what was the old time here? 85. And then what did you get down to? You got down to 40, didn't you?
Yeah.
45-point
Coming
move.
up to like the 61. You threw the
Yeah.
61?
So we're well through that. And we're actually through the 0.618 Fibonacci extension.
Yeah.
And I guess the only other thing is your 0.875. And if you get through that, you're going all-time highs. And I don't
If
figure
people
those
are
out.
still spooked, and if the lockdown, if we had to go back in a lockdown, all these stocks are in favor. I don't know. I hope that's not going to happen, that we have to go back in a lockdown, but it's not off the table either. I think there's a decent chance Activision eventually makes all-time highs. So I'm sticking with it.
You got in this one early, though. I mean, you
I did. I was early on it. And you know what? And Michael Pachter was early on this too. And I got in at 50 and it went down to 40. But I stuck with it because the valuation was still somewhat attractive there. And I didn't think gaming was going away. You know, the way they make the money too, Activision Blizzard makes a lot of skins, like inside purchases inside the games. It's kind of like, ingenious business models. I mean, selling the stuff inside the games to make your gaming experience better. I mean, it's, you just boom, you can just, buy the thing and you have your.
And you know what else the company really has going for it? Probably the best thing.
What's that?
Bobby Kotick. He went to Michigan. And he's actually.
Well, got to bring Michigan into this.
Yeah. He's good friends with my buddy's brother, but I mean, he goes on CNBC. So I don't know if he wants to step up to the plate and come on PMP after being on CNBC. But anyways, I don't know where this one's going to stop. I would just say that, as long as it holds above 71 today.
Hard to chase it though here. I'm not chasing it. I'm in it. I'm holding it, but I'm not buying it up at 73. I'm not buying more shares. EA pulled back. I bought shares. So again, same thing. You can see what's happening here. Buying dips, selling rips. That's kind of my story.
Before we go to our next earnings report, Daniel Manahan is asking, can we talk about yesterday's SPY dump later in the day?
Wow.
And that was Spencer. Spencer and I were on, and it just seems like it was just a little bit of a nervous market. You had a couple Fed boys speaking, and there was some news about, maybe some more cases in Europe and stuff. But that last hour is tricky, folks. I mean, the big boys coming in that last hour. But as you can see, the market rebounded right from it. So I don't think there was any specific reason for that decline. We had rallied 120 S&P points, but I really can't put my finger on one particular thing for the reason for that sell-off yesterday.
Sometimes you don't need a reason, and maybe we're just overbought a bit. I mean, we were 279 the day before. I was on the show yesterday morning at 287. I was like, if you're buying here, you're doing it backwards. Well, it worked for 4 hours because we kept going up. But eventually we did, succumb, and we eventually did start selling off. I'm more inclined to sell this pop here. I think you got some resistance up at 289 to 290. Yep. So for the day traders out here, I'm more inclined to sell the pop here, even as a trade. Again, same story, selling rips and buying dips. We're going to see, I know we're not technical and pattern traders as much. We trade some technicals, but you can see on the SPY, if you bring it up, there is the potential that we could be forming some type of head and shoulders here. And just looking at the left shoulder in the first part of April, the head right up there, you can see when we spiked up to 295, just going back 6 sessions ago. Now we're kind of just making a little bit of a right shoulder. That could take some time. I think you have a battleground between 278 and 288 SPY, that 100-point range, for a while here. But I think buying up at the top of the range, I'd rather be buying down at 280 SPY and selling up at like 288 to 289. So that's kind of how I'm playing it a bit, but I still think we're not out of the woods. And I tweeted last night, the technology stocks is the whole reason we've held up. And Spinner making a good point to me last night. Oil coming back is helping.
Oh, huge help.
That's helping for sure. What is concerning to me is that the banks really aren't participating. And I don't know if you can continue to go up to all-time highs without the financials. So we've done a lot of things without the financials, and it has worked, but we're in this situation where credit's going to become an issue. I see Wells Fargo sitting right down yesterday again. Market way up, Wells Fargo's down $1. Yes, it got downgraded, but other banks were in the red yesterday too. It was an ugly tape for some sectors yesterday, and it was an ugly tape for the financials because the market was strong and the financials were once again weak. Something like is just going on in the financials. And I think it's the concern that we could be a lot of their businesses. I mean, I even talked to, you talk to the banks right now. Buddy works at the banks in the commercial department. He's like, there's nothing going on. I mean, we're closed. There's nothing going on. The bank's earnings are not going to be good going forward. I mean, in this next quarter, they're going to be ugly. Yes, they were okay for the last quarter, but big banking, we don't see any. And we had the first deal that we've had. Think of investment banking. First deal we had was yesterday, and it was like some small $1 billion deal. There's no M&A. There's not a lot of big deals here happening. I mean, yes, you're going to get some, some offerings and some stuff from, some of the investment banks can help with that, but big banking deals are on hold. And then there's some bad loans, and obviously, we know that they've got to raise their capital reserves for potential bad loans here. There's a lot of things to be worried about in the banks, and I'm just going to say it again. Financial crisis part 2 is still not off the table. I talked about this back in February. It started to look like March. It's like, oh crap, this could actually happen. And now we've bounced, and we've bounced significantly. I'm not saying it's going to happen, but I don't want to own a lot of banks because I don't know it's not going to happen.
Some of the longer term investors that I could sell with, and I'm looking at the chart and stuff, and hard not to panic when the SPY went down like to 225. I was really convinced when we had that 50% retracement when the SPUs were at 2780, 2800. I was like, man, this is a great place to lighten up. If you didn't panic at the bottom. Then, of course, we did that sprint to 2,900. The way I look at it, with all the the factors that you're talking about, maybe we don't have to go up to 3,300. We don't have to go back to 2,500. We could be in a trading range. We could be in a 2,700 to 2,950, 3,000 trading range for the next 2, 3, 4, 5 months. The market doesn't always have to go to extreme levels. So what I'm hoping for, from a long-term perspective is, I guess the best case scenario is we break out, go to 3,000, go to new all-time highs. I don't think we're going to do that with this certainty. Worst case scenario is, boom, the bottom falls out, we go test 2,100. But the most likely, or 2,200, the most likely scenario is you just chop. You just it consolidate. The market consolidates and trades in a range much more than it has the kind of moves that we had in March and April. And I think that's the new norm until we get more clarity.
You're exactly right. I think you're going to be range bound, selling rips and buying dips, fade trade. And people say, what do you mean by selling rips and buying dips? I mean, when the S&Ps are falling off 100 points in 2 days, I'm more prone to buy stocks. When they're rallying 100 points in 2 days, which they just did, I'm more inclined to sell stocks. And just, and that's my bias. And obviously, you're trading and I'm doing all kinds of different, I do arbitrage type strategies. I do all kinds of different things. But, from a money management perspective, I'm not buying stocks, my portfolio, when we're up 100 points. I'm buying them when we're down 100 points, unless they're having significant falls in a stock that I like EA. So that's where I take an exception. I mean, we had a significant fall, stock came back down to a support level I liked, and it's still got a story, and I don't think COVID is going away. So all my ducks in a row, I strike an EA.
You want to strike with one more earnings report here out of the Motor City? You want to go to General Motors?
Oh, we can do that. I was going to go to Beyond Me, but we'll do that after we get Tommy. Let's do GM real fast. And this one is a bit of a misnomer because the report was fine. It was good, actually.
Yeah, it's good numbers.
EPS 62 cents versus 33 cents. Sales 32 billion versus 31 billion. But they said that the real damage will come this quarter.
Of course, yeah.
Yeah. So
I mean, again, when you look at General Motors, they had 2.5 months of completely normal activity. Nothing even happened. When did we go into lockdown? Really, not until
it was March.
Near the end of March.
Near the end of March, the first 2 weeks of March was somewhat normal. I mean, the market didn't even start selling off until the beginning of March. So you had, I guess you saw in February, but then you had the bounce. So I mean, really, it didn't really start getting ugly until mid-March. And obviously, the market was predicting because we were starting to get ugly. But normal business activity for the first 2.5 months was kind of normal. So it's not surprising that GM's earnings for last quarter were okay. This next quarter is going to be an epic disaster. We know that. That's why the stock is priced where it is. It's a matter of where it goes from here. I don't think even if we come out of this, that people are running to buy new cars. So
I'm a little bit torn on that. I'm a little bit torn on that because I don't think people are going to be going to Disney World. I don't think they're going to be traveling. I don't think they're going to be going on vacation. They're like, hey, I'm going to get my size a nice ride. I'm a nice.
Maybe.
Yeah, that's what I think. Real quickly,
I think
we got
there's
to
a
get
lot
to
of people
Tommy.
though. Like we think like Wall Street, and obviously we know a lot of people who traders in Wall Street. But Main Street is trying to pay the bills. I mean, you think about the 20% of the workforce that's lost their jobs. I mean, that's a lot of cars not going to be sold. People definitely who lost their jobs aren't buying a new car. So I just think there's so many people who are struggling to make ends meet that I don't see how General Motors sales don't implode for a prolonged period of time.
We got to get to Tommy Lackey. I just want to say someone has an opinion here at $23. We've popped up here on 3 different 15-minute brackets. So there's a seller perched at 23. You take 23 out, maybe you challenge the high of the move. Another high at 23.44. So let's see what happens at 23 even. Get through there, 23.44. This stock has a history of being pretty wild on earnings. Do we got Tommy on in the background?
We do. I'll bring him on. Tommy Lackey is a managing partner and portfolio manager at Relativity Capital Advisors. Tommy, good morning.
Morning, guys. How are you?
We're doing okay. Good to see
you. Is that a Peloton?
No.
No. I'm not that. I am not that high fashion, my friend. Actually, unfortunately, I wish that thing got a lot more use than it does.
Mine doesn't get any use either, Tommy, so don't feel bad about it. How's it going?
Doing great. How about you guys?
We're here. We're just fighting the good fight. That's what we keep doing. You know,
it's funny you say that. I think the day-to-day play is the best way to do things right now, and listening to FinTwit and even listening sometime to you guys and all that, it's amazing how quickly we can get caught in our views.
What are your views on the current situation? Like, let's just get the overall Tommy Lackey view on the current situation from a financial standpoint, but also from a personal standpoint. You know, how are you holding up?
I'm holding up fine. My day really has not changed at all, other than our kids are at home. Other than that, I go to work, I go home and play with my kids. So that's about it. So it really doesn't change all that much. I'm not a fan of the whole lockdown thing and all that. I don't believe that places like where I am that are very rural should have to do it as cities do. I believe living in dense population places is a choice. It has both benefits and consequences. So that's kind of my view on the overall. However, it really doesn't change my day-to-day work or anything like that. And this has been very interesting to go through because, as you guys know, one of my big bases is I use a lot of breadth work and I use a lot of relative strength work. That kind of combine for what I do. And I do a lot of ETF based stuff as well as stock stuff. But, the breadth work really started showing some bottoming out and things like that around mid-March. I have a few tweets out, and I believe I even came in y'all's chat around the end of March saying that we were real close. Of course, no one knows when, and we could have made a lower low. But we were real close in seeing that there was a good bit of potential upside opportunity. But it's just so hard when you have the level of velocity that we had to not be somewhat petrified as you go into that. Now, and I said since then, wrote a lot to my clients telling them that, look, if we hadn't made changes in late January, now's not the time to make them. We need to see how this bounce goes. We need to see what actually gets attention and participation and what doesn't out of the lows, and then we start making changes. So the last week or two is when we've starting to look and start making changes as we've been moving sideways, because the breadth work I do and the relative strength work are very, very clear that there is a huge bifurcation in what's going on out there. And that's what y'all been talking about every day in the markets. And that's the problem. I think so many people are still throwing the baby out with the bathwater, saying we need to because of the fear of the forward, as opposed to some of the numbers have been much stronger than expected. Even though you're right, April numbers are going to come out and be the ones that are the worst, but our worst fear was last month. So when last month's numbers came out better, I think we come off the lows on the fear side to where even when next month's numbers come in bad, I believe there is a chance that they're digested decently because we expected it by then. Now, I'm not a V recovery guy, but I also do not believe that a retest of the lows has to happen. But I said in those first couple of weeks very clearly that if we have a retest within the first 2 or 3 weeks, it's not a retest. It's just we're going to new lows. Retests like this on major moves down like this are months and sometimes quarters later, not a couple days. So this is what we're feeling out now, and now through the summer is to see whether we actually retest or not. And I'm not convinced we will. I mentioned to a gentleman yesterday that I believe there's the worst thing that could possibly happen is that we have a huge trading range, which I think could be as wide as 31.35 down to 24.50, that just beats people to death all summer. So that's kind of the potential that I think could happen, just an excruciating back and forth. And every time we get our hopes up, we get kicked in the face. Every time we get real negative, it starts working its way back up, because the one thing we have different now that we've never had in history is that we have had the largest and the quickest response by both the Fed and fiscal that's ever happened in any crisis ever. So to weigh this one against those past crises is leaving out huge, huge variables. And that's my problem with looking at history. We always look at it to some extent, but the reality is the variables are always different. So don't ever expect the exact same thing to happen again.
I mean, that's a huge part of the equation is the Fed. Without the Fed, this market would be significantly lower than where it is right now.
Absolutely.
So as it goes down, the Fed is going to defend the market. So that is another part of the bull thesis as well. I completely agree with you. I think we're going to chop around for a long time.
But I think the Fed played it almost perfectly too, because while Congress was diddling and liquidity was just basically going to zero, the Fed sent out a bazooka at just the right time. I mean, I've never seen them in my 25-year career play it as well to try to stave off a potential further crisis than they did this time.
They did
Whether
a good
it works
job.
or not, I don't know.
So Tommy, what are you coming in here and buying right now?
Well, again, I don't think right now you can go and just jump with everything. I think you want to make your decisions. And when we get some of those pullback days and things like that, like Joel was talking about earlier, you start looking at interest. But one area I really like, and I said earlier, was tech and healthcare are both still strong. Mm-hmm. And it's not just the biggest guys. Yes, they're getting big intentions, but look at something like Now. Look at something like NOW. Look at something like Team. Look at, some of these guys that are up at their highs. You were talking about the gaming, I consider them consumer discretionary, but EA and Activision and some of those, those guys are still at the highs. And I don't think it's necessarily going to taper off when things open up, because like you said, there's still going to be now the choice of going out.
Right.
I don't think we should be closed down, but I have no urge to go to any of these places because I didn't go that much before. I like going out and playing on the lake with my family and another family, and that's about it, So that's kind of the way I view it, but some people are still going to have that fear and have that there. So that, another one that I really like is you can look at the ETF IHI. Should I share my screen? I might ought to.
You can.
Yeah. Go for it.
Yeah, that'd be great.
Let me pick, because it's very ugly.
IHI, that's the medical devices ETF from
Medical Devices ETF. Yep. And something I threw in the chat a minute ago, I just want to show you guys real quick before we go on, when y'all were talking about financials, is right here. If you look at this, the breakdown in the S&P is financials are at one of the lowest weightings they've ever been at.
Yep.
And that's something we've got to be looking at. Now, they're a little higher in the IWM, which obviously we can see. Yep. As well as energy, but financials are so low, and healthcare and technologies are really where this key is. Now, of course, a lot of that technology is the big five, but like I said, there's a lot of other guys out there that are basically able to move these markets if you're into picking the individual stocks. Now, IHI was the one in healthcare. In technology, I would still be looking at software. I've really done a lot more ETF work. How do I move back to a different screen?
You can click on the green share screen button again, and then you can just pivot to a different screen from there.
But all of that disappeared too. My whole thing disappeared.
Here, let me let's try that. So now
awesome.
you just reset it. There we go. So
thank you.
You can show us some charts, Tommy. What do you got?
That sounds like a master's in Zoom now.
I'm going one, and then I'm just going to make this big. This is what I look at right here. to where if I'm looking at any security, I look at this phrase. I'm going to go to a single chart so you're not killed. But I look at it from a lot of different views to kind of see where I think things are going. But looking at IHI, let's jump there real quick. This is the medical devices chart. Again, biotech's been the hot one. Biotech's still strong, but this medical devices chart has come off the lows very well, has given very little, if any, back over this last month. And then, so, if you want to be an ETF and want to look at something a little more spread out, this is a great look. And down here, if you look in the bottom panel where the RSI is, we have a RSI that basically closed lower with a higher price close here. I call this a positive reversal. RSI positive reversal. And when this happens, it's not too often that the indicator closes lower and then the price closes higher up here on the price chart. That right there often is a very good strength signal that this rollover is not going to last, that you just put in a short-term pivot back higher. And so with this one, this is one good example, and probably my favorite in it is ISRG. I mean, look at that consolidation that's gone across a month. You got a lot of little buy days in there. You got some distribution days as well. But you got little buy days. Volume has dropped off as we've gone across. And so really we just need to see it pop out of this over about 525-ish in that area. And you've got a very easy play here against about 490 if you want to be loose and you want to hold it longer term. Shorter term, once it gets over that level, once you come back below yesterday's candle around 510, you could use that as a stop as well. So pretty tight to be able to play against for a short or a long-term play with that one. But that's one area that I think is one that people ought to look at outside of just your basic biotech type looking. In technologies, again, I think people still miss some of the different, especially in the ETF markets now, things we can find and we can look at. Hack is the one that's cybersecurity. Splunk had some big news yesterday.
Yeah.
FEY is having some big news and all that. Look how quickly this one is made up. You got a lot of accumulation volume in here. Your RSI is already back in a bull range, and you have another one of those positive reversals right there. So again, you're playing against that low, probably around 38.44 if you want to be tighter. And then you can play over probably around 40.65, which is the highest close in this move, and just move your stop up with you. Some of the softwares now, I love the fact that they have trailing stops. Put in a trailing stop if you're worried about it. Grab what you can and keep moving. And that's one of the areas in this market that you can look at that. But these are the kind of things to where I like it. Now, I said that that's on the breakout side, but I always have two levels. So like on this one right here, if it pulls back, 36 would be an area I'd really love to see how it holds up. Again, you don't know whether it's support or resistance till you get there. And once you get there and test it, then you can get an idea of that.
I mean, cybersecurity is something that's going to be there regardless of if we're home
Correct.
or we're not at home. I mean, this is, again, that's why technology has held up so well too, because so many of these stocks still do well even with social distancing. I mean, they can work in both environments.
Correct. And the thing that's great about where we are today, I mean, I know a lot of people don't like the idea of free trades and all that, but the thing that's for people, because it can hurt people, but the thing that's great about this and all the tools that we have is, man, if you looked into my sheets that I have just on ETFs, I can get so granular with an ETF and still own 30 companies.
What do you mean by granular?
Granular means like with Hack.
Just so niche.
Yeah, exactly. Okay. Like there's one called iBuy.
Yeah.
IBUY. There's another one IPAY, that are basically specific into these different payment processing or Hack or, medical devices or all these different little things. I think there's the opportunity there that is huge. I don't really want to own cars right now, but there's an ETF just for automotive. Once we do see things kind of playing there, coming back. I talked last week about if someone really wanted to play the beaten down things, they should play PEJ, which is an entertainment ETF that has hotels, airlines, your other big venues like media companies, all of that. So again, if you're looking for the beaten down guy, why pick one? if you're looking to play it 6 to 8 months.
This is what I was going to say earlier, but I didn't get the chance to. Dennis, you own like 5 video game stocks. Why not just own ESPO or Hero, right?
I mean, you could do it that way too.
Yeah.
And here's why
I like to own the
this.
stocks, but
here's why I'm saying this is we're in here all day, every day. There's a lot of people I think that listen to this show that are in here a little bit, but then they go to work at 9 and then try to catch what they can. And so if you're in that realm, but yet you still want to be more active than just being in an index, these ETFs out here today are wonderful. I've put together some great relative strength screens. Maybe we'll show next time or look at next time that are really that I have every sector broken down with all the ETFs. I have all the majors. I have all the internationals, all that in their own little scans. And it is just awesome to see how they're moving different during this time.
So are you looking for ETFs to buy? Like, are you looking at you start with the chart and then you go from there, or do you start with I want to buy something in tech and then you go from there?
I start basically, since I do all the breadth work, and remember my breadth work breaks all the way down to industries.
Okay.
I don't just look at broad breadth. I can look all the way down at semiconductors and see how many semiconductors are above the 50-day moving average versus not, and all that. So I've done that for a decade now. And so with about half of my business and my clients, we invest them in ETFs and all that because they just don't need the single company risk to still get the returns. And they don't want to trade every day. They don't want me trading for them every day. So I'm managing portfolios more in sectors because I can't just do indexes and I can't do passive. It's just not me. But on the other side, for like our Hawk Alka Discovery strategy and all those that are individual stocks, we just keep drilling down. And you just keep getting all the way down until you get where you want. I'm not a fundamental guy. That's why y'all were telling me about Disney earlier. I'm looking at the chart and the relative strength. I've got my own relative strength calculations that tell me who's moving now. Because again, even with that, remember my relative strength is 3 months, whereas most people's is 6 and 12. So I catch the turns. And then I move from there to the chart to say, okay, how much strength do I really have here to support this relative strength move?
All right, Tommy Lackey has been with us. He is the founding partner, and PM at Relativity Capital Advisors with some really good charts. And we'll have to get you back on to. I'm all about nerding over ETFs, so we can talk more ETFs next time, Tommy.
Would love to. Anytime you'll want me to. I'm kind of back in the swing. I know I had to drop off for a year or so, but love to come on anytime you guys want me.
Great, awesome. Tommy, be safe out there, and thanks for coming
Tommy.
on.
Thanks, guys. Have a great day.
All right, I want to get to Beyond Meat.
Yeah, we got Beyond Meat. I'm getting a lot of requests here. I think we got Beyond Meat and Shopify. Yeah, so let's roll. Let's go.
Beyond Meat, this one's good. EPS 3 cents versus a 6 cent loss estimate. Revenue 97 million versus an 86 million estimate. So they beat the estimates and they destroyed on a year-over-year basis. A year ago, they lost 14 cents and made $40 million. And last quarter, they made 3 cents and they more than doubled their revenue. So they crushed it on a year-over-year basis and they blew away the estimates for EPS and revenue.
We know the business has been doing well. We know the business is probably going to continue to do well. It's always been just a story of valuation for me. That has never made any sense, which is why it's never won my long-term portfolio. But the story is intact, and it's obviously held up fairly well from a relative strength perspective. I mean, we've rallied significantly from the $54, $50, or $48 low, I guess it got down to. But, I mean, the story is intact. With that being said, I would say your first point of resistance is taking Joel's levels here, 116.64, the high from 5 days ago. What's it do there? I don't know where it went to in the pre-market.
You got a level ahead of that, and I'll just give you one level, and we'll move on. Double top on a 15-minute chart, 112.80. We've leaked $3. You got to get up there. You got to clear that thing, or we're giving back some gain. So big number, 112.80 Beyond Meat.
Then the other one you want to talk about? I forget already. You mentioned
Shopify.
Oh my goodness, how do I forget about Shopify? So priced for absolute perfection coming in, made a new all-time high yesterday. Earnings, which Spencer Israel will give you in a second, were fine, but priced just for perfection. So not surprising, get a little bit of profit taking.
Shopify out this morning. Let me get their numbers. EPS 19 cents. I don't know if that's comparable. Maybe it is to an 18-cent loss estimate. They blew the EPS number away. Sales They also beat $470 million versus a $443 million estimate. So they beat the estimates for EPS and revenue. They said subscription solutions revenue grew 34% on a year-over-year basis.
They specialize in getting businesses online. They specialize in helping businesses to sell stuff online. It's a COVID stock, and it has traded like, or I shouldn't say COVID, it's a social distancing stock. It can be played that way. Shopify works in both environments. We know people are buying more stuff online. They're going to buy even more online after we get out of this. So Shopify story, I think the stock is eventually going to $1,000. The valuation's very high. We know the valuation has never been, attractive, but I owned it and I took an exception just because I said about the Canadian aspect, and they've got so many tailwinds here going. They're going to be coming out Amazon eventually too. They're doing everything right. They're firing on all cylinders. Great company. It's just run so far. But with that being said, I sold my stock at 620 2 weeks ago. I bought it at like 300. It was over a double for me, and I want to get it back. If we pull back to low 600s, I might just rebuy it because I regret selling it. So even though valuation is nuts, I just want to own the stock. So I'm looking at this as a buying opportunity to buy the dip. I want it a little bit lower. I don't know if we're going to get it lower. I think there is people who will buy this dip in the low 600s if it gets there. I don't think it's going to get there.
Interesting chart. You did have a reversal now trading in the red. On upside, an area where I think you'll find good resistance if you happen to rally would be that all-time closing high price from yesterday. It's 686.11. There's my resistance. For your bulls here, you take out 662 and you're on your own. I do see the pre-market low at 655, but your 2-day low is down at 617. So if you're picking a bottom between those two levels, I think you're just throwing darts here. But there are two levels for Shopify.
Let's go to Pinterest here. This one's a bit weird. So I
thought this was the one you might have bought.
You know what? But I looked at it, but
I thought this.
I could get talked into it. Talk me into it somehow. I could get talked into it.
Not
I
gonna
can't
do
even
that.
pronounce the name of the company. How can I talk?
I could get talked into it. I'll say that.
All right, so this is not great. The CEO said they saw a record number of people turn to Pinterest last month, and yeah, they still lost money. They lost 25 cents per share versus an 8-cent loss estimate. They made their sales were 271 million versus a 270 million dollar estimate. So they're still losing money despite a record number of people coming to the site.
Their earnings were okay. I mean, not great. It had just a hell of a run too. I mean, we're down from 10 to 21, so it's not surprising that it would pull back. Uptrend is still probably from you're getting hit. So the uptrend is broken here, definitely broken. But 15, if you were to get to 15, and I'm not saying you're going to do that. I think it's going to get bought before that. But there's major support. Go even before that. You go 16.
Yeah, 16's halfway, Dennis.
Yeah, say 16s.
Yeah.
I mean, and we got down to 1670 last night. I think it holds. I could get talked into buying the dip on Pinterest. It's not one that's on my shopping list. It hasn't been on my shopping list. I could get talked into it, but again, they're burning a lot of cash. It's a tough environment.
That doesn't sound like a very good trade.
I know. It's like if you're half in, half out, the Mr. Miyagi
come on,
thing.
Warren.
Don't stand in the middle of the road. You get squished by the truck anyway. So
I
think I'm just going to be out on this one for now, but I could get talked into it.
All right, 1670 pre-market low, 16 evens to 50% retracement. When I look at this rally that we had, I think a lot of people are jammed on the short side. I know a lot of people don't short, but there is still some short interest. I think if you've been, laying this thing out ahead of earnings, the last 4, 5, 6 days, it's probably below your average cost. You got the catalyst of the bad earnings, so. I don't think they're going to lift this thing and get it back to unchanged or anything. But I think as you creep down to that pre-market low, 1670, even if you breach that, going down to 16, that to me that looks like it's support.
All right. What do you do with Peloton here? They're after the close. They're after the close today.
I think they're going to blow it away. I think the numbers are going to be awesome. Is it going to be priced to perfection going into it? A little bit. I'm long it. I am very torn. My neighbor, TJ, if you're there, he's long it. He's like, what do you know? Because I was talking about Peloton. I thought it was going to have a run up before earnings. It did. Man, I probably I don't know if I want to take the chance of taking it through the report. I think the stock could blow it away though, and could be over 40 on the report. So part of me says hold it. Part of me says take the 20% you just made in 3 days and run for the hills. I mean, it's been, is that what it's up in the last 3 days? It's up significantly.
Yeah, it's up quite a bit. Yeah.
It's up almost 20% in 3 days ahead of the number. Tough call. Well, I think the numbers are going to be really good.
3808.
Perfection.
Yeah, 3808 all-time high. Unlike Dennis, I don't like buying and selling a lot in the longer term stuff. So I'm holding.
Not supposed to either, but I just end up doing it.
I'm just holding.
You do it anyway.
Yeah, I'm just holding. A great arms workout yesterday. I'm on it 3, 4, 5 times a week. So glad we had it. I drove. I had to drop something off at my daughter's place yesterday. I go by this LA Fitness and this Planet Fitness and these places, and the old Disney. Like, are people going to be running back into those places? I don't know. I mean, I know they're expensive. I've already got my value out of it.
You're right.
Yep, I'm not doing a lot off this report.
I think this is a thing people are going to work out more at home too. So I think going forward, I like the story. The story is intact. The only reason I would sell it is if I think it's priced to perfection. I think I'm going to be able to rebuy it lower. That's the only reason to sell this. Valuation too. The valuation's extreme. We know valuation Shopify, Peloton. It's kind of like a Shopify. It ran up a lot. Not that comfortable to hold it through the report. I want to sell it because I think it could pull back just if it doesn't just blow it away, but I think they're going to blow it away. I would not surprise me in the least if this is over 40 tomorrow morning.
All right, Dennis, let you go. I know we're going over here.
I'm very torn. Somebody asked me, one more second, just Gilead. Because
that's what I was going to say. Go.
Somebody been asking me about Gilead. I've played this perfect. I really got, obviously a little bit of luck involved with some of these executions, but I played it really well. We know I made like 9 points, and then I made like another 3 points, and then I made another 6 or 7 points on, just trading this thing by buying it in the mid 70s. I think the easy money in Gilead has been made. The trend is still there. I can't argue if you're buying it here at 79, the trend is there, but I feel like all the good news is kind of in it. The drug, has got some FDA, has short-term approval. And I feel like if it comes out and some of these studies come out and it's not doing as well as everybody thought it was doing, which I think might be the case, I don't think it's a difference maker drug. And there's other companies who are working on drugs as well. So I think the Gilead story for the most part is I think it's kind of over. Not over, but cooled off enough that I'm not coming in.
It might not. I mean, also, I look at this perspective is like every one of those news pops have been sold.
They've all been sold. I sold them. I sold them as fast as I could. So it's a huge company, and this drug isn't going to make any difference on their bottom line. We know that. So it's not like this is going to be a game changer drug for them.
But it's got a story, Dennis.
But the story now, they've talked the story. We've talked the story, and the story itself is cooled off. So it would not surprise me if Gilead started to actually give some of this back. So I'm out. I'm out clean on Gilead. I don't own any of it now. I played it well a few times. At this point in time, I'm not rebuying it. I could be talked into it, but at this point in time, I'm not rebuying it.
I got it. Not selling it. Okay, Spencer, we'll let you wrap things up.
All right.
Warren Buffett, he holds forever.
Except the airlines. On deck for after the close here, Peloton, we mentioned, Lyft, Square, PayPal, a number of big names reporting after the close today. We did cover, we did a better job today of covering more stocks. So I know we didn't get to all of them. We didn't get to all your questions, but if you have another one and you want to join us at 3:40, ask it again, and hopefully we'll get to it on our closing show. I want to thank our guest, Tommy Lackey. Thanks to everyone in our chats, all 3 of them now. The pre-market prep chat on premarket.benzinga.com, the chat on our YouTube channel, and the chat on Benzinga Pro. Thank you for your participation. Please remember, all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Everyone have a great rest of your day. Be safe wherever you are. Joel and I will be back with you at 3:40 Eastern Time.